Now then, I'm going to talk about something that a lot of us already know. Everybody knows that Apple's in the headlines, and there's been this thing about 300 billion, 320 billion, 360 billion. Oh my gosh, where'd that money go? It's not a loss of money. It's a change in their market cap or the overall value of the company. And I'm going to tell you all about it and what's up on this week's case study. What's with the headlines in Apple? Where are they facing headwinds? Where are they going? And we're going to go take a look at it. And I'm going to grab my Vault. And if you want Vault, you can get a case of them right over there at Amazon. Black cherry, watermelon, cucumber mint, or this one, coconut. And you can go get a case of them. Try it for yourself. It's time to unlock your brain with Vault. And right now I'm going to see if I can unlock your brain and show us something that's going on with Apple. Let's go to Studio B. All right, Studio B and my board, my favorite board, and my Vault. I'll put my Vault down right there. Let's see if we can unlock your brain just like we do with the Vault. So anyway, right now, meaning right now, we're sitting here right in the middle of October of 2023. And it doesn't matter if you're watching this now or a year from now, because I think the lessons are going to be very instructive. Here we go. We're going to talk about Apple. Now, there's nothing wrong with Apple. They're not going to die tomorrow, but there's some very important things that are going on inside Apple that represent challenges. And there's some great lessons in there that you and I can learn. Also, it'll help you, have a beer with your friends at happy hour on Friday and talk about intelligently what's going on with Apple. So let's dive in a little bit. We got some headlines going on. What are those headlines? Well, people are out there talking about headwinds. I saw Wall Street Journal. Apple faces headwinds. Well, what does that mean? It's windy. It means they're going slower than they want to in the wind. Okay, well, let's see what's causing that. Well, the stock's down 10% in 4 months. They were over a $300 billion drop, which goes off the $3 trillion valuation they had. So in other words, they've lost, I don't know how many Twitters that is, like 5 Twitters they've lost or something, 6 Twitters, probably more like 8 Twitters when you add it up. Nonetheless, it went down. That's a hell of a lot of value to drop. Why is it? Well, sales are down. 4 quarters of negative growth. That doesn't mean negative sales. That just means sales are growing differently than they were before. Let's take a look. You can see that Apple, this is the percent growth in sales. And sometimes they were growing 40, 50, 60% was their growth over prior year or even prior quarter. And all of a sudden down here, so here's 2019, here's COVID, and here's all that madness that happens around COVID. Wow, we come out of COVID and things are going good. And now take a look. And in a couple short weeks, in early November 2023, they're probably going to announce that sales are flat or down year over year, which means this is the first time that they've had 4 quarters down since 2022, way back here. And some of you who are 21 years old watching this, you were barely born or not quite born at that point. So Apple is facing this. Now, they're a great company and they're making billions of dollars. A lot of things are going on, but why isn't the freight train still running at a positive rate? And that's why some of the Wall Street guys have been, whoa, horsey, back it off. And guess what? The stock price comes down a little bit. Let's go dive into what these headwinds are. Well, the first thing is, there were some sensationalized things such as the iPhone 15. The sales were kind of cold, but the iPhone 15 was hot, so hot that it was burning people. It was smoking hot. And some people say, well, it's the curry, because now some of those are made in India. Bad joke. So the iPhone 15 was going. Then sales in China and reliance on China in general. They've been unable to really get the same super pop in China that they've had in other global markets like the Greater European Union and United States of America and Canada. Haven't been able to get it there. Next, free cash flow is 3.6% against a 10-year average of 6.4%. Let me explain what that is. That means when you add up all of your operations, what percent of total revenue was converting into free cash flow? In other words, not just profit. Profit can be calculated using accounting tricks, and you can say you've got this much profit, but you only had this much, free cash flow because maybe you had to pay debt. So you had a lot of profit, but you had paid debt, and so the cash flow that came out was smaller. Well, they've been averaging 10 years, 6.4% free cash flow. Now they're averaging 3.6%. Guess what? Having that cash pays down their own debt and bonds and also helps them invest in the future. An iPhone 15 that doesn't smoke. Sales is trading at 26x. stock trading. I need to fire somebody because this isn't sale trading, this is stock trading. The stock is trading at 26x. It's above the historical average, which means it's a little overheated. And if you've heard about the Magnificent Seven, the 7 stocks have been doing really good in 2023 compared to the rest of the S&P 500. Apple is one of the Magnificent Seven, so it's a little overcooked. Why? Because people were buying it, and that extra buy activity was pushing up the stock price because of demand for it, and so the demand was creating stock price come up because there wasn't anything else very interesting to buy. So people were buying Apple, Meta, Google, Netflix, NVIDIA, chips, the Magnificent Seven. So then all of a sudden, the percent of analysts rating it a buy is the lowest among the mega caps. Mega cap is when you, Apple, are worth $3 trillion, and Microsoft, multi-trillion-dollar company, and the other multi-trillion-dollar companies, trillion-dollar companies, those are the mega caps. And so the percent of analysts that are rating Apple a buy is the lowest among the mega caps. So you look at all the analysts that follow each stock. There are 61 analysts that follow Microsoft, and 84 are rated a buy. You'll hear things like that. Well, guess what? A lot of people, analysts, are stepping back saying, great company, been around here forever, but is it going to be the same growth tomorrow? Is it a good buy today the way it was a good buy 10 years ago? Don't know. So you have analyst issues. So there's the headwinds. So let's take a look at the 5-year run. And the 5-year run saw them go to $1 trillion of market cap, to $2 trillion market cap, to $3 trillion market cap. Started off down here at 50, ends today where they are right now, up 118 bucks, 219 over the past 5 years. So if you put $1 in here, you had 219% growth on that dollar there. That's pretty good. So you see where it is, and but it's backed up a little bit down there at 172. So it's way up, but what people are looking at, big run up here. Here's COVID, 22, 21, 22 there. Afterwards this. See this kind of flattening out, and now you see what's happening here. This area here, grow. So it's going up like a stock, and all of a sudden, you got this going on. This is the uncertainty of the future. Remember the iPhone was pretty big, the iPad was pretty big, the iWatch was pretty big. So now what pretty big is following all that? They need something big to be following it, so you can see that. So there's the run up. Now let's look at much closer. Let's only look since a year ago, in the past year. Now I take that 5-year chart and I focus on a year, just the last year. Now you can see something. Now the baseline is 120, which is a little bit at the low water mark here at January of 23, and you come running up here to 195. Now it's all the way down into the 170s, and there's a lot of uncertainty in that. So that is a momentum change for sure, because this is August, September, October. This is 3 months, not 3 days in the stock market. It's not, hey, interest rates are up and the stock's down for a minute. No, this is a little bit of a trend forming. Are they going to pop back when they announce in November? Don't know, but they've got a lot of things that are pushing back on them. So now you can see what's going on. So the big question everybody's asking, okay, well, that's all the things that aren't happening, but what about the new thing? Well, Vision Pro, those aren't running out the doors. That's not happening. Then the Apple Card future. Biz Doc did a case study on Goldman Sachs and the Apple Card, showing what an adventure that was. It wasn't all that it was cracked up to be. Still, you have 6 million people in America that have the Apple Card, but there's a lot of question marks about the future. Then you move to Apple TV programming. Programming is getting more expensive. They just fired Jon Stewart. They paid all that money for Jon Stewart to come do Jon Stewart's show on Apple TV, only from Apple TV. And that was the whole gig, make you subscribe to Apple TV Plus, because that's the only place you could see Jon Stewart. And oh my goodness, he's back. That's great. Well, guess what? Didn't go so well. And Jon Stewart was talking about China. Whoops, it's where we make iPhones. And talking about China negatively. Whoops, it's where we're trying to get a market going. And they were talking about a lot of other things that really wasn't going so well. And so suddenly, Apple's like, okay, we can't have this guy on Apple TV that we pay to be here doing all this stuff. You're fired. So Jon Stewart's off. So that just shows you how hard it can be if you're Apple, where you're a manufacturer, you're trying to do all these things, you're also trying to be a programmer. Then Apple TV subscribers, it's not going like a freight train. So where's the new thing? Now, I'm not criticizing Apple for doing any of these things. You know why? This is a sign of a company that's looking for the next big thing. They could drive what's going on, but it's a company that hasn't found the Apple Watch, hasn't found the iPad back in the day. And as a matter of fact, today, people are talking about, man, iPads are, with the iPhone Plus, the big size that they have now, I hardly use my iPad anymore, to be honest with you. And I wait till I get to work and I got my laptop with multiple screens and everything, sit at my desk, and the rest of the time, it is so good. People have made apps so convenient to use, even though you're on a small screen. Why do I need to have an iPad? I don't. So personally, I don't. And I'm not saying throw yours out a window. I'm just saying, suddenly the gap from phone to laptop, when do I use the iPad? So there's the next new thing, having issues. So now let's look at lessons for you and me. Is Apple going away? Apple's not going anywhere. Apple is here to stay, and they're going to be making phones, and they're going to get the iPhone 15 to stop cooking your pocket and cooking your purse. All that's going to happen. But the real question is, what's next and where do they go? Let's look at lessons for you and me, because you don't have to be a 25-year-old company or even a 5-year-old company to apply some of these lessons in what you do. Whether you have a t-shirt company in Berlin or you're running a little technology startup in Silicon Valley, there are lessons here. The first lesson is, writing product success is fine. You're supposed to bet on your hits. But denial is a powerful drug, and you need to trust your data, such as Apple TV not making money, such as the Apple Card having challenges with Goldman Sachs. Don't get in denial. Always chase data. Ride your success. Bet on your hits, but trust the data when it tells you maybe the customer feels like the product's a little old, needs to be refurbished, you need to add some features, or a competitive product has come out. Remember, there was Uber, then there was Lyft. So there's a million examples I could give you of things like that where people are going to come out and do that to you. Software or anything you do. Next, plan and invest in the future. First of all, make a profit of what you're doing, and then plan your future and think about it, because you can't ride this thing forever. There's many, many product companies out there that tried to ride something forever and found them in a future where suddenly nobody wanted it anymore. Although if you did brand surveys, the brand had very positive attraction. I'll give you an example. Vans. I had Vans back in the day, but there was a time that Vans were like, whatever. Vans have kind of made a comeback. Why? They put some effort and money in investing into style, what people want, and yes, they even made the retro shoes with some colors and a little bit of changes on them to kind of bring them forward a bit. So that's all about planning and investing in the future, knowing what your people want. And then be rational about your investment. You don't bet the farm on the next big thing. You need to be practical. So trust your data, probably the most expensive and important words that are on this slide. And cautious boldness is not always bad in a tough market. So where you're going right now, being cautious but bold about what you're doing is never a bad thing. And that, my friend, is the lessons for us as we talk about Apple and what has recently happened for them. This $3 trillion company may now be a $2.6 trillion company, but it's a great company. But even Apple can have burps and bumps in the road the way you and I can. It's all about where we go and what we do. Now, we're going to go back to the main studio, and I'm going to grab my vault, and we're going to go wrap up. All right, I hope you enjoyed that. Apple's not going anywhere. Again, over $2.5 trillion of value. They were at $3 trillion. I hope that was informative. It kind of shows you how things that go on at Apple can be applicable for you and me in terms of lessons to apply to our businesses. And if you like that case study, you can check out these case studies here that are on screen. You can click on them from the Biz Doc archive so you can learn other things that might be applicable to your business.